Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Upwork, what's good and what's bad about Upwork. So one of the things I want to highlight is that investors have really not seen much change in the share price over the last several months. And you can see that it's not really so much about Upwork and Fiverr. These are two companies that investors typically compare and contrast against each other, but it's really more about the COVID space in general. COVID winners. I've put here in this graph, I've highlighted Chewy, I've tried to highlight Peloton and Pinterest, and you can see that there's this very similar overlap in the share prices, how they've done all these. They've really just, investors haven't really been very discerning. They're just seeing it this all as a COVID winning basket and just being disenchanted with it overall. However, in the case of Upwork, I think there is something worthwhile considering. Yes, the first half of 2021 was particularly strong, with growth rates coming in for H1 21 at close to 40% year-over-year growth rates. But it looks like coming out, the exit rate from 21 is going to be approximately 22%. Can Upwork grow at faster than 25%? That's the question that you need to try and figure out as we come up. So analysts following the stock, they're kind of expecting the stock is going to do approximately 22% over the next several quarters coming into 22. So analysts are just kind of extrapolating what they think Q4 is going to exit at and just gone that forward. And I'm not sure if that's really the right way to think about it. On the one side of the equation, you can see here that active clients have been increasing over time. This is always something that's very compelling when you want to look at any business. You want to see that the number of users, the number of customers, the number of clients continues to go up. At this stage in a business, when it's growing, it's a total addressable market. It's not so much about pricing power that's really important. It's really about being able to grow the number of active clients. And this, you can see this very bullish sign here. On the other side of the equation, when you look at Upwork, you can see that its take rate is down year over year. And that's because its marketplace revenues have grown, and this has driven the revenues higher, but it's the take rate of that business is slightly lower take rate. So with that in mind, if you compare with Fiverr, you can see Fiverr's take rate is nearly double, it's approximately double the take rate of Upwork. So it's kind of like, yeah, Upwork is doing okay, but Fiverr is doing significantly better. And this is really reflected in the valuation too. You can see here on a price to forward sales that Fiverr is priced at approximately 18 times next year's revenues, whereas Upwork is priced at approximately half the rate at 9 times forward sales. Does that mean necessarily that Upwork is meaningfully cheaper? Well, yes and no. So here's the thing. Upwork's gross margins are approximately 73%. Fiverr's gross margins are 83%. So there's about 1,000 basis point discrepancy between the two companies. So yes, you can say that Upwork appears to be cheaper, but actually when you dig out, it's not really that much cheaper because it's a lower quality business. So I think that this space overall is kind of, investors have kind of sift through it and kind of, digested this a lot already. And I think that this space is probably fairly priced already. If you want to find out what kind of stocks I'm investing in right now, that I'm passionate about right now, don't forget to check out my marketplace. It's called Deep Value Returns. You can see the name on the screen there, and you can do a totally free trial to see if it suits you. And you can unsubscribe anytime before the 14 days, and you're not going to get charged anything at all. What's more, you can check out the reviews from Marketplace on Deep Value Returns on Seeking Alpha. You can see what other people said. That's always a good way to do your due diligence. And maybe you're new to investing, or you've been investing for a while, but you just haven't got the time and inclination to get involved, and you just want someone to kind of give you one or two compelling ideas. That's what my Marketplace is for. Okay, see you next time. Bye-bye.